Hi, everybody. Thanks for joining. Before we dive in, please take a minute to subscribe to my channel if you don't already. And please check out the link you see on your screen for a message from our sponsor, The Motley Fool, where you can get the top 10 stocks to buy right now. So, on your screen, you see 7 growth stocks, all of which I own in my own portfolio for a variety of reasons. And some are actually really big positions in my portfolio. So, let's go through these one at a time and talk about kind of the future potential and why I like them. So, number one is Sofi. Sofi was a product of the SPAC boom. It was one of the Chamath Palihapitiya SPACs, but it is a actually pretty great company and it's delivering on everything it said it would. They're a fintech company. They are kind of intended as a bank replacement. Most of these fintechs aim to be kind of a supplement to banks. Maybe they offer a high yield savings platform, but really that's it. Maybe they do one or two things really well. But SoFi aims to do everything that a big bank would do and to do it better. So far, they've been really successful at getting customers to open accounts and switch from their big banks. And if they can keep their momentum going, there is a lot of potential here. I'm really excited to see their new earnings come out in a couple weeks. Little over a $5 billion market cap right now. It could be many times that if they're successful in executing on their vision. Next is Pinterest, which is actually one of my largest investments in my entire portfolio. They are a social media platform. They focus on ideas rather than people, kind of different way of doing things. They're really starting to focus on e-commerce. They recently brought in a new CEO who has tons of e-commerce experience. He essentially headed e-commerce at Google. And it's a natural fit for the platform. Pinterest is kind of designed to help people find things that they may eventually want to buy. So why not insert themselves in that process? If they can figure out where they fit in the e-commerce world, the sky is the limit for Pinterest. Next is Dream Finders Homes, DFH. They're a home builder. They went public not that long ago in the 2020 and 2021 boom. They're an asset-light home builder. That means that they don't own a lot of land. They don't actually buy land until they have a purchase contract on a home. Before that, they just own options to buy land. Helps keep their capital requirements really light and lets them reinvest a lot in actually building houses. They focus on high growth Sunbelt markets. They have a big presence in Florida and the Carolinas. Pretty small company right now, sub $1 billion market cap. But asset light home building has been a very successful industry in the past. And if Dream Finders can replicate some of the results that its big brothers have produced, then it could be a big win over the long run. Appian, APPN, they're a software as a service company that offers a low-code development platform. The kind of short, simple way to say it is most businesses need apps, need ways to automate processes, things like that. It's not always efficient or practical to hire in-house developers to do it. So Appian lets companies do this without that added burden. $2.7 billion market cap. They also have a pending legal judgment for over $2 billion from a rival who stole Pegasystems, who stole trade secrets from Appian. So really nice value play, actually, on top of just being a strong company with a great product. Next is C Limited. They're based in Southeast Asia. They have a gaming division. They have an e-commerce division and a digital payment platform. The latter two are growing very, very fast. The gaming division has not performed that great lately. About a $35 billion market cap. They're often called like the Amazon of Southeast Asia. So I think there's a lot of potential still to go here, especially after the recent downturn. Next is Zillow. This is one that I've admittedly been disappointed with. I bought Zillow about a year ago because I liked their iBuying business. I thought that they would be the undisputed leader in that, and their competitive advantage of having more real estate data than anyone else would translate into success there. It did not work out that way. They actually pulled the plug on iBuying after losing billions of dollars. And now they're really pivoting to focusing on their core premier agent business and trying to build out kind of an all-in-one real estate app. To put it mildly, I'm not sold on it. But for the time being, Zillow has a $10 billion market cap. Over $3 billion of that is just cash sitting on their balance sheet after winding down iBuying. So I'm curious to see what they do with it, and I'm holding on for the time being. And finally, Shopify is a relatively new addition to my portfolio. They're the e-commerce platform. They make it easy for any business of any size to buy or to sell their products online. They have a lot of tools for sellers. They create kind of like an ecosystem of services. About a $50 billion company. At one point, it was over 200 billion. And I think it could get back there someday. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.